Hi, I'm Mark Mancini with VRB Outstanding. This week we're in Myrtle Beach, South Carolina, and we'll be discussing financial planners. Welcome back this week to VRB Outstanding. We're here with Scott Pyle from Pyle Financial Services, who's been in business over 3 decades, and he's been providing care for his clients in over 30 states. So Scott, the other thing that is a touchy subject is tax evasion. We all know Al Capone. He got arrested because he didn't pay his taxes.
Yes.
But there is something called tax avoidance, and that's 100% legal, right?
Absolutely. You know, the tax law, if we stacked up the documents, is about 36,000 pages. Isn't that crazy? 36. Not me, I can promise you that. And I don't think the Congress who approved it did either.
Probably not.
But there's about 34,000 pages that tell you how not to pay taxes. That's amazing, isn't it? So I talk about the tax law as, think about a wall, and that wall is the law. And there are doors in the wall, and there's windows. So there's a few ways to get through that wall. Some people choose the difficult way, which is to walk up to the wall and beat their head into it until they form a hole and climb through. And that's the wrong way. But there's doors. Or the other way would be to run and dive through the window, which is bloody and painful and no one wants to do. But the simple way to get through or pass through the wall is to go open the door that Congress left in the law. And you walk through and you reduce or not pay or avoid the taxes because they've given you doors for your benefit in the tax wall or the tax law. That's the way I think about it.
So what you're saying then too, it's absolutely American and patriotic to practice tax avoidance, isn't it?
Well, you know, it's interesting, and the words you think about is you have a certain amount of social capital, and you can give it to the government and let them decide how to spend that social capital, or through charitable giving or depreciation, or even just taking your standard deductions. That money comes back to you, and you get to choose how you spend that social capital. The government is trying to persuade you to do certain activities. They're trying to, so for example, if I'm a business owner today, I can choose to sell my company to a third party, or I could sell my company to my employees and get huge tax benefits because the government is trying to help the retirement problem we have in the United States. And that is an example to me of the government persuading me to behave a certain way to get to a certain end for the people of the United States. So it's very American because it's that social capital, but you get to control it versus just sending it to Uncle Sam and hoping they spend your social capital well. So far, I don't think they do a very good job, my opinion.
So Scott, the other thing about tax avoidance, I guess, is tax deferment, pushing out to your older.
Yes.
Right. Some people will say, well, if you're not paying it this year and you have to pay it eventually, I have to pay it. Why not just get it, pay for it now? But you talk about pushing that tax down the road. Why is that so important?
It's really interesting when you think about deferring taxes. There's a couple options that'll happen in the future. Either A, you're able to build more liquidity and build more wealth and control the amount of income you have in a year, or control how you receive your money so you're able to spread out the tax bracket that you're choosing to receive your money. In the future, you could borrow money from yourself. You don't pay income taxes on a self loan. I mean, so there's all kinds of tools that today we know you could use in the future, but we do know tax law changes. And so as you defer, ideally, you're growing your money on the money you would have given to the government. So you're building that spread, if you will. And we anticipate building wealth over time. And unfortunately, the tax code, it's not fair. It's just not a fair system. So right now, the tax code favors the wealthy. It favors people with flexibility as to how they receive their income. And so as a real estate investor, it's another way to receive money through depreciation and other tools. So I could go on and on about the tax code. I gotta stop myself.
So it's not just for people like Jeff Bezos or Elon Musk who make a lot of money. There are some of these tools that people who are your average, typical 1-2 home real estate investors may be able to take advantage of?
Oh, absolutely. I mean, today you can even invest in real estate in your retirement plan, in your IRA account. There are companies out there that allow you to hold your IRA with them and then invest in real estate. You couldn't do that 10 years ago. That did not exist. So you see the tools of the what we'll call uber wealthy or ultra wealthy starting to become available to people like you and I who want to be efficient with our income and with our money.
That's always good news.
It is good news.
So Scott, there's a difference between active and passive real estate professionals and people.
Sure.
I know there's certain tax benefits for those who are active versus passive. And some people have even asked me, Mark, should I get my realtor license? And I said, well, you're not really going to sell real estate, but there may be other benefits to going ahead and getting that, or your property management license, to be properly licensed. But there's also some benefits to that can also save them money possibly, isn't there?
Well, anytime what we see as an investment advisor, when we're looking at the retirement or the financial plan, if you're active in your business, there's, again, working with your tax specialist, there's things like maybe deducting some of your car, your mileage, going back and forth to your properties and checking them out, taking potential short-term renters to lunch. There's normal business deductions and expenses when you're active that you get versus when you're passive. And that's just kind of standard stuff. And so active can really, and then whether you get your real estate license or not, a professional like you would probably be better to even answer that question than me. I just know the benefits of active versus passive, and it can be quite robust.
The other thing too about being an active real estate investor, you have access to tools like FMLS to be privy to some behind the scenes, some pocket listings, some other agents in the office may have, et cetera, right?
Absolutely. You're starting to talk the lingo now, right? And only because as a financial advisor, but also as an individual, I've had in our industry, we have to do what's called outside business activity approval. But I've personally been involved in real estate on and off since 1995.
Wow.
As a business owner and as an investor. And so personally, I've seen the benefits of either myself or a partner or someone on the team having access to those tools.
And the contact.
And I don't know quite all the lingo, but yes, the MLS and the pocket listings, and also the strength of being in the courtroom if you're bidding on foreclosures or you're looking at any type of bank-owned properties. They tend to work more with people who have the licensing. That's what I see.
So Scott, I'm kind of environmentally conscious. My wife and I are big Tesla fans. We invest a lot in Tesla, and I believe in Tesla solar panels. But with a short-term rental, I'm not just a consumer. I'm a business owner. So aren't there any federal tax credits available for business owners, whether it be an EV charger or solar roof, that we can take advantage of still, or is there still some out there?
It's funny you say that, because right now my wife and I are building a house, and we're looking at all of this geothermal system. We're having to put a geothermal in our house, and the amount of federal and state credits that we will get personally. So, and then on solar, love the Tesla stuff, but also where we live right now, it's not approved on the coast. But just the solar panels and different companies, the benefits of being environmentally conscious. But right now, we talked earlier about the tax system, and the government has these credits and tax deductions to incentivize our behavior to try to help the environment. And right now, I'm taking advantage of them personally.
I know we just took advantage of putting in a Tesla charger at our Florida Keys property, our latest investment, and that's something that I urge all short-term rental owners do is to put in a electric car EV charger so that guests can come, because believe it or not, that's actually a filter now on Airbnb. I'm pushing VRBO to get on board. So when people are looking for homes, aside from pools and hot tubs, they have the EV charger because they actually make better guests.
Oh, and I will tell you, we own a Tesla. So it sounds like a Tesla commercial right now.
It's okay.
But I do. I filter by my charging, and it's a little frustrating when you go to a high-end area and they don't have any kind of charging. And so you're having to now run around, and we've made decisions on not going somewhere because there was no destination charger when we got there.
Believe it or not, our second guest didn't know we had a Tesla charger, came down because South Florida is riddled with Teslas, came down to the house, were pleasantly surprised because they thought they had to drive down to Marathon for a charge.
Oh, yeah.
And the thing is, when people go on vacation, it's not like they're driving around miles and miles and having to charge up every night and it's costing you $20 a night. Really, they charge up once maybe, and then maybe before they leave, they tap it off. It's going to cost you $15 for the week.
Yeah.
What's the big deal?
No, I tell you, it really, the convenience of that, and there's also a sense of, and the reason we made it, there is a stress level to it. When there's not efficient charging and you're going into an area, it's kind of like not having a gas station where you're going. I mean, who would think of that? So I totally agree. I think the day of electric chargers and the electric vehicles is here. And so be an early adopter, and I would put one in.
It's funny, I have a challenge out to short-term rental people. And about 10 years ago, Wi-Fi was considered a premium. Either, well, this house has Wi-Fi, this one doesn't, or if you want Wi-Fi turned on, there was a charge for it. And now I think we're at that same crossroads with EV chargers and Tesla chargers where, well, I'm not going to put in a charger, but if I do, I'm going to charge the guest. Just put it in. Put it in now because you're going to get a tax credit on it, right? And you're going to get more guests. So I'm done preaching to the choir here, but I'm trying to preach to that choir out there that it's definitely a one-time, one price investment to your rental, that it's an amenity that'll pay off in droves. Now, Scott, you're not a 1031 person, but I know you advise to use 1031s, and why is that? What's the importance of a 1031 exchange, and kind of what is it for some people who don't know exactly what it is?
Yeah, it's interesting. You know, there is the 10 section of the IRS. There's so many. There's 1031, 1035, 1042s that we work with clients and their tax expert. And so when you have a piece of real estate, and you, let's just say, you give an example. You paid $100,000 so many years ago, and now the real estate's worth $300,000.
Nice appreciation.
You like that? That was a good advisor. Thank you. So in that situation, there's $200,000 of gain, and if you've held it more than a year, it would be a long-term capital gain. And in some states, that can be state, federal, and the Obama 3.8, it could be over 30%.
Wow.
That's on 200 grand, that's 60 grand. And if real estate is still a good investment at the time, because it's all about investing in the cycle, right? It's not what you own, it's where you own it in its cycle. So a 1031 allows you to sell the real estate at $300,000 in this example, turn around and put that $300,000 in another property and pay no taxes.
None at all.
None at all. So that, again, that's another door in the code. When it applies, it's a great door to use, especially if you like real estate and real estate is still something you want to be in.
Now, Many people, when they hear 1031, they think they're selling one house and getting another. But you can sell multiple and get one, or sell one and get multiple, or sell multiple and get multiple, right?
Go from industrial to commercial, commercial to residential. There's no restriction on what type of real estate, how many.
Long-term versus short-term, primary residence.
It's really more flexible than you would think. Again, 1031, the 10 section of the code, is just another door to walk through to not pay taxes on the transaction. And I believe you have up to like 45 days.
Actually, I think it's 60 days.
60.
So actually, you know what's interesting?
See, I told you, always consult your tax expert.
Yep.
I like to frustrate CPAs, not be a CPA.
I know I've used Atlanta Deferred Exchange, and I used them a few times for some transactions. And if you go ahead and sell your property, and you've got, at that point, 60 days to find and close that property. So it's a very narrow window. But I know what we've experienced last year was we found an ideal property. It was amazing how we found it. But we found almost 3 acres in the Florida Keys, and we purchased that first, and then we did what's called an advanced 1031 exchange.
Okay.
So then we had 6 months to sell 1 or 2 properties that we wanted to include in that exchange, and give us more leeway, more time to do it.
Fantastic. Okay, so now I know who to bring in the room next time we have one of those with a client. That's great. It is amazing to me, and I learned this more and more. Back to that team you talked about, right? And this is a great example of our communication. A real team. We're learning together. We're rolling up our sleeves together, and it's much more flexible. The tax code is more flexible than you would think, but it's having the expertise around the table to execute.
So Scott, how I'm going to close this up is interesting. I'm going to meld a few things in. I always tell short-term rental owners, people leave 5-star reviews not because of one thing you did right, but because of all the little things you've done right that accumulate. And having that team, that professional team, again, I'm going to mention it, and I say this all the time, 1 + 1 = 3. But in this case, it might be 1 + 1 + 1 + 1 = 5.
Yes.
Right? It's that combined talent and resources. So in full disclosure, we're clients of Scott's, and I recommend them to others. But please, whatever you do, find a qualified financial planner to make sure that you're saving a lot in taxes, because I know Scott's done a great deal of savings for us, and I hope he continues to. And again, Scott, appreciate your time today.
Thank
you so much.
And I learned a lot. It's been a great exchange for me as well. Thanks, Mark. Appreciate it.
Well, we'll see you next week on VRB Outstanding. Take care. Don't forget, hit the like and subscribe button below.